All right, we're live on YouTube land or Facebook or whatever.
Twitter, X, whatever it is.
So PJ has some things to share with everyone today.
Oh yeah, thank you. You see that? That's the notes. More
So David Brown, PJ Bailey, we are down the street at Sierra Pacific Mortgage. We know all y'all. For those in Cyberland watching, thank y'all for having us. We thought we would just give some updates, some things to expect coming down the pike that's new in our world, and just let this be conversational too. We always are interested in things that you're running into, things you're seeing, things that could help us get sharper in what to look for and see, and how we can be out in front of things in the lending world instead of being reactive. So we'll have some conversation as well. So I get this, we get this digest on a fairly regular basis that I thought I'd kind of read off of or share some updates on. Yeah, and then and then there's some new programs that are coming to light. And so some of this stuff that I'll share is a little more on the negative side, right? I mean, we're in like a real estate environment that's tough in a lot of ways. Good in some ways, but tough in some ways as well. But there are some good things going on in our industry that we're excited about that's really going to help more your first-time home buyers or those without resources to put down on a house. So we'll get into some programs that I think are exciting. And some things to look forward to. So who knows what the I have a couple little giveaways too, by the way. Who can tell me what the average 30-year fixed rate is as of today?
8.63.
Is that it?
Yeah, 7.9. You're right on the money. 7.90 as of yesterday afternoon, which actually is a little dip from where they've been.
Yeah.
We officially crested over 8% in mortgage rates, which is a little depressing, but dipped a little back down. So, and this may be some information you guys see too, but this Redfin chief economist had these comments to say. I thought this was interesting, and this is in light of an increase in new listings. And I'd be curious to hear y'all's take on this too. But September saw a notable 1.4% increase in new listings, the highest monthly rise since February of 2022. Still, however, new listings are 8.9% less than the previous year. And then Redfin's economist, Daryl Fairweather, had this to say, which I thought was interesting. Many Americans have substantial equity in their homes, and some are choosing to liquidate, even if it means letting go of their favorable mortgage rates. They're concerned about potential home price declines if rates persist. While we anticipate high rates continuing, we also predict sustained high prices into the coming year. The current tight housing supply means even minor increases in listings attract eager buyers, boosting sales. So, that's good to see, good to hear. More buyers are backing out. I don't know if you guys are seeing that. 16%, about 16% fell through in September as rates climbed to new highs. Kind of a breakdown of some of the elements at play. Increased mortgage payments from higher rates, obviously. Buyers are more cautious to make sure they're getting a good deal. If they don't feel they are, they're backing out. Skyrocketing insurance premiums. We've all seen that, heard about that. Insurance costs are going through the roof, making transactions less appealing as well. And then disagreements on repairs, kind of a constant battle. Hey, this needs to be fixed. No, we're not going to fix it. Creating transactions to fall apart or causing transactions to fall apart. Anyone know where the metro with the highest rate of cancellations was last month? I'm looking at Tim. Atlanta. I'd give you one. He's already got one. Second.
One per household.
Yeah, we don't need one right now.
Interestingly enough, the next 4 metros are in the same state. Any guesses?
Tennessee.
No, it's not Tennessee.
California.
Not California.
Arizona.
Texas.
No.
Florida.
Yes. I figured we'd get a Florida at some point.
Jacksonville, Orlando, and Tampa.
I wasn't going to wait 47 more guesses. But, Goldman Sachs forecast for next year, 2024, Mortgage rate, let's see, they project higher rates that'll keep a lot of homeowners on the sidelines, causing the housing turnover rate to fall to its lowest level since the 90s. The company also says home prices will grow by 1.3% year over year. For comparison, Zillow and mortgage bankers expect prices to rise by 2.2% by the end of next year. So hopefully some continued appreciation. Foreclosure delinquency rates rise. So national delinquency rate rose to 3.29%, up 12 basis points from August, and up 13 basis points year over year, making only the second and largest annual increase in the past 2.5 years. So early stage delinquencies continue to increase, which could mean more foreclosures down the road.
What would cause a house or somebody's home or currently to go into foreclosure? And what would be the mental thoughts of them to not just sell instead of letting it go into foreclosure?
That's a great question.
I've always wondered that.
Yeah.
Especially, in a market like this, you would think.
Right. Since there's all this equity out there, why not just sell it? That's a really good question.
I would think it would probably go to a few things. One being ego.
Yeah.
You don't want to sell the house because you don't want to tell your family or friends or coworkers having a sale. So they're thinking the alternative is just maybe I can get something to get me through, and maybe we can rework this with the lender or something. I would think that's one, but there's probably a bunch of different reasons on it.
If you watch Dateline NBC, which I don't know that I recommend, last Friday night, the husband would just kill the wife and then
Insurance?
take the insurance money. And that actually was that was the episode. Not suggesting that. But,
It could also be the spouses. If they have a spouse couple, that happened to me. I wanted to sell, my spouse didn't want to.
Yeah.
So it went into foreclosure.
yeah.
Good point.
Yeah.
Denial.
Yeah.
Denial.
Yep. Mortgage applications dropped to no surprise there. Lowest level since 1995. Decreased 2.2%. Anyway, so enough negativity. PJ, let's talk about some positives.
There's positives. I'm all about that. Get that out of the way first.
Yeah. Has anyone heard about the new 1% down conventional program? No. So 1% down. There's a box. Obviously, the client's got to fit within. It's a Freddie Mac Home Possible program, and so they have to be within 80% of the area median income.
Yep.
The 225 is the max purchase price, and there's a cap of $4,000 that so if you're familiar with the Home Ready, Home Possible conventional first time home buyer programs, it's a 3% down conventional program, and so with this new program coming out, and it's out now, these loans can start closing in late November. The borrower puts 1% down. The lender actually subsidizes it with a 2% grant, no strings attached grant. So it would actually be coming from our company.
Do you have a certain ceiling that you can reach with this program?
So the grant can't exceed $4,000.
No, I mean
Oh, in terms of number of
terms
borrowers.
of number of borrowers.
Not that I know of.
Yeah, I don't think.
Yeah, I don't think there is. So a fairly small box in terms of purchase price, income limits, that kind of thing. But it's a conventional loan,
Dang.
1% down.
And what the sellers can pay up to, was it 3% or is it 2%?
If it's probably 3%.
It's still 3%.
Yeah,
Okay.
if the
10%.
right 10% or more, yeah, would be what 6%, I think.
6, yeah.
From seller pays. So owner occupied, 1 unit only, so it can't be a duplex or triplex
Okay.
or quadplex. So that's something to be kind of excited about, right?
Yeah, absolutely.
Yeah.
You just have to meet Freddie's guidelines. So for usually at least a 620, I would say.
620 or 640.
Or maybe 640.
I think she said 640 on that. I may be wrong, it might be 620, but then there's, other factors that go into it, like
Yeah.
debt to income and, of course, down payment. But
There is and I'll keep with the conventional theme here. Has anyone heard about Fannie's new tolerance for 5% down on up to a 4 unit? So Fannie, this is big news. Conventional loans, so you can do FHA, a 4 unit or 3 unit, 3.5% down. Well, conventional Fannie is now allowing up to as little as 5% down on an owner occupied 2 to 4 unit property.
Great.
4 unit?
4 unit, yeah. So
This,
if you have a,
okay.
if you have a buyer
When did this happen?
right now,
yeah,
Okay.
just had
you could close as soon as what, the 20th of November maybe. Or
Yeah,
you can lock a rate that day and then close that.
following.
Yeah.
That's my child's birthday.
It's my birthday.
It's
Yeah.
my
November
son's
20th.
birthday.
Yeah, it was, how, wasn't it like almost 20% down for a 4 unit, even if it's owner occupied?
Yeah, I think
You
15%.
can do 15, but have a line on it.
Yeah.
Okay, I remember thinking, well, this
Yeah.
kind of blows then, why don't I just buy a normal investment?
Yeah.
Why would I owner occupy it?
Mm-hmm. Yep. So that's Fannie only for now. Freddie will probably follow suit. Usually, what one does, the other one will end up doing.
Can that be, if you already have properties, you can move into said 4 unit?
I think so.
Come on, baby.
I think so. Yeah. I'm pretty sure it'd be like any other conventional loan.
Yeah,
So.
just a little letter explanation, moving here,
Mm-hmm.
have family coming in, or
Okay.
do whatever. Rental.
That's what I'm gonna do for
And the cool thing about that too is when we have it appraised, the appraiser's going to do a market rent analysis for the other 3 units, and we can use 75% of that projected rent towards their qualifying income.
Nice.
Could it
So-
be pro forma, or is it just
Yeah.
the current rate?
Well, it would be the market rent analysis the appraiser does. So, so that's a good question. So if it's already rented, is the appraiser going to go by what the rents are, or are they going to use the market rent analysis?
Where do they find the market rent analysis at? I've been looking for this bad boy for a while.
I don't know. We should ask Danny that. How does he do that?
Because I've heard this thing exists, but nobody can tell me anything about it.
I'll get
I don't know if
find
he-
out.
Might be a
It's
reason.
online.
It would be helpful if you still worked in real estate.
By the way, we were going to have Danny, our appraiser, join us, our appraiser friend, join us. But Karen said he wasn't allowed in the building.
Oh, the panic button.
Did he get the? He was,
Yeah.
he was here. Oh, he told me.
You guys
He felt so
felt so
bad.
No, in reality, keep in your prayers. His wife is battling cancer, and they're
Oh, no.
yeah, it's nothing new, but yeah, they're on the road right now, so might need to cut that out.
Yeah.
Another new positive thing to look out for: the new National Homebuyer Fund National DPA program, Down Payment Assistance Program. Y'all heard of this one? You've heard of THDA, which is a DPA program. The National Homebuyer Fund is not just a state bond program, but a national program. The great thing about that is no income or sales price limits. So, but it is an FHA program, so you can't finance more than what, 470 right now? For 2023, it's like 470.
471, 200, I believe,
Or something like that, yeah, and then it'll probably go up for next year. But so it's a 96.5% first mortgage FHA. It's got to be a 1 unit house, SF, single family, PUD, condo, manufactured. The down payment assistance is up to 3.5%, lesser of the sales price or the appraised value. That is a second mortgage. Okay, so that's the thing that makes it not quite as appealing as THDA is that second mortgage has to be repaid over 10 years at a 2% higher rate than the first. So they've got to be able to qualify
Dang.
for both. Yeah. So
In THDA, you have to pay that back as well once you sell.
once you sell,
So
or if it's the 6%, that's repaid over the same 30-year term.
Okay.
at the same rate as the first, which right now is what?
7.25.
7.25.
It went up over the last 30 days and went from 6.75 up to a 7.25.
Okay.
Hit 7.25 on Monday.
Which, if you think about it, it's a pretty darn good rate compared to
Yeah.
7.9, you know,
Yeah.
for a first-time home buyer who, you know.
Yeah.
Turn times are a little bit longer on those now. I
What
think
about
they're
who-
3 weeks behind.
Who sets the THDA thing? Aren't they on their own thing?
Tennis
And
THDA
Is
does.
it, okay. Does USDA have its own thing too, or just
Mhm.
THDA? 'Cause I think they normally, was it like they give like a 30-day notice, hey, we might go up, but with things being so crazy, they were like, just kidding, next week it's gonna be this.
Or the same day.
Or the same day. Or we
Yeah.
get an email from THDA saying, you know, see attached bulletin on rate increase, and it's now.
They're like, just kidding.
Yeah.
Yeah.
Well,
No
and
warning.
frustrating,
Yeah.
and PJ's dealing firsthand with one right now, where the rate, you can't lock a rate on THDA until it's ready to go to THDA, right?
It's gone through our underwriting and then
Yeah.
get ready to send it, then we lock it right before we send it.
Shoot.
So I watched that rate go from where it was 6.75 up to, and there's nothing I can do. Feel hopeless, right? You know, you helpless. You can't
You do the property locked?
do anything.
Wow. Wow. No, typically it's when the property's in a contract, or you guys are locked in?
Yes.
for rate?
Generally, if the closing date's within, usually, you know, 45 days.
Is that when people, when it gets kicked out, that's why buyers get all, mad or whatever, they do rate lock, stuff like that?
Yeah, I mean, we have to extend the rate or
Okay.
or let it expire if we think it's going to be better.
Okay.
Yeah, but not THDA.
Yeah.
THDA, we can't lock it until
Day lock it.
we've underwritten it and have it ready to be passed to THDA for their stamp of approval.
Wow, wow, okay.
I mean, that in itself on this particular deal changed the payment by like $30 or something. And when you're already up at a higher DTI, it could affect it.
Mm.
Yeah.
So that's where, our organization, we're looking at, I spoke with Liz, our operations manager, about how can we streamline this and get these THDA loans out of our system and over to THDA real quick to mitigate any type of interest rate increase. And then I think somebody said they were trying to do something with locking the rate maybe a week or two before sending it to THD, but we haven't heard anything back on that.
So, THDA, of course, is a first-time home buyers program. This National Home Buyer Fund doesn't have to be first-time. And again, there's no sales price or income limits. So, on THDA, is it 400,000 in most
I think
counties?
it's right at 400,
And the income for 1 to 2 family is around
83,
some thousand.
87,
And then it goes up to 1 something
106.
for a 3+ person.
But the good thing about
So-
THDA, if you have a husband and wife or 2 people that's going to go into the home, and they both work, on THDA, that you only go off the one that's on the mortgage. So if the spouse is not on the mortgage, we don't have to use the income. So, if somebody makes $70,000, you put them on the mortgage and the other one makes 100.
As long as we can qualify them.
As long as we can qualify, as long as we can qualify. So
Kind of like the Home Possible and Home Ready programs.
Right.
We don't have to, as opposed to USDA,
USDA, yes.
you've got to count all household income regardless. of who's on the
18-year-old
loan.
that lives there,
Right.
Wow.
Yeah.
Yeah.
Um,
and it kicks them out.
Yeah, so a little more flexibility there. So we're excited about that. That's available mid to late November too. FHA will now allow accessory dwelling units. Have y'all heard about that? That's new. In the past, you couldn't have an ADU, so if it's inside, outside, over a garage, something like that, we can count that, or that can be used.
That income from it.
Yep. Mm-hmm.
So that's good.
So up till now, we couldn't count, there couldn't be an ADU with FHA. And then we were made aware of a new program through one of our broker partners, first and second. Y'all remember the 90-10s, 80-20 back in the day where you could do a 80% first with a 20% HELOC. This is going to be different than that, but kind of the same concept of a first and a second, kind of similar to the National Home DPA. So 100% program that's going to be a first and a second. I think it's gonna be on an FHA loan though.
Yeah, I
so
think it's
it's-
93 or 96.5%.
Yep. With
First,
3.5%.
and then 3.5 on the
So,
second.
we're gonna get some more details on that. Another, all of these programs I think are designed to help homeowners or buyers to deal with this environment we're in, with higher prices, higher rates. So hopefully they're applicable to some people out there. That's all I have.
So, I've been seeing and hearing that, everybody's like, oh, I'm just gonna wait. I'm sure you have people that's like, oh, I'm gonna wait.
Mm-hmm.
And someone told me one day, and you've probably heard it before, it's like, marry the house, date the rate. You can always refinance it, because when rates come down, what's gonna happen? Everybody's gonna jump back in.
Yes.
And we're gonna be back into that 2020, 2021
Yes.
bidding frenzy and bidding wars, and you're barely making it. If you can qualify at the rate we're at now, it'd be a good thing.
Mm-hmm.
So but people are gonna do what they want to. I have people I've already pre-qualified, like it's been probably 8-9 months, some year and a half. They're just, we're gonna wait till the rates come down. We just keep doing what we can and come out with new things that could potentially help. And the ones that want to move forward, we just move forward and get them in. So
You say date the rate.
Yeah.
On a scale of 1 to 10, how crazy is this rate?
well, look at the axis. So
Yeah.
it's probably it's pretty crazy. But it is probably better than waiting, because that's the crazy part. If you just wait and take it whenever.
Every point along the way, you feel like, well, surely rates aren't going to get much higher than this. And then, what do you know, we break 6, then we break 7, now we've broken 8. It's like, well, where's this going to end?
Well, we know next year, probably 4 to 5, maybe 6 months before November, we're going to start seeing it. It's going to start trickling down.
Yeah, I think a lot of the commentary we're reading and hearing is that maybe by middle of next year, we start seeing a softening in rates. I think we're going to have a tough year in most of next year like we have this year in a lot of ways. But
And get ready for the election, right? So all this 3.5 years that we've gone through, pretty crazy, right? They're going to drop the rates and say, oh, look what we've done.
Mm-hmm.
Maybe, I don't know, speculative.
that's true, yeah, that's very possible.
So to try to stimulate the economy
Yeah.
and try to have people with the short memory be like, oh,
Yeah.
look what you did for us,
For the people here.
Yeah, so I mean, and you can look at it either way, but that's just, it's possible, right?
That election year was crazy.
But some good news though.
I remember early this year being like, okay, we're probably gonna get back down to the 5s, middle of 2023. And it was like, nah. Which is crazy, because I remember thinking once rates went to 7, it's like, we're gonna slow down a whole lot. And like the market in general has slowed down just because there's not too many folks selling, but in general, haven't slowed down too much. People are still buying, they're finding ways to do it. And I think folks are still leaving wherever they're coming from. You still get a couple people, and their rebuttal is, well, we gotta wait, all this crazy inflation. Like, how? Like, how will it go back down? We've put all this money into the system. You have more demand than ever. We dropped the ball around 2015 with not enough new construction. We're seeing places like Orth, Wolf, Guardian, they're going hard locally, just building. And they're some of the most conservative people in the game, because after 2008, they got burned probably the hardest, if not from lenders. So I just see all that stuff coming up, and I don't know. I would love for rates to go down, because I do see affordability being an issue, that there's going to be less qualified buyers. I know in that stuff it was saying possibly it might go up a little bit more or whatnot. What are y'all kind of feeling, or what are y'all reading as far as, I know there's no crystal ball or whatnot, or like, but where's that point about no return? Like, there's affordability and demand and the interest rates all kind of battling with, kind of the future. Where does that kind of land out to make sense?
I think we're starting to see it a little bit. I mean, I think at 8%. I mean, I saw some kind of headline about how now in America you've got to be making, $110,000 to be able to afford the average house that's for sale.
Yeah.
When median income's nowhere near that, it's like, well, something's going to have to give there.
Yes.
So, I think ultimately the percentage of people's income going to housing, unfortunately, is just is higher than it ever has been.
Yeah.
And may continue if we don't have more
Reality.
supply or. But you know, I think locally I hear that with the builders, but I think also you hear about in other parts of the country them starting to slow down because of the rates. And
Yeah.
so that's concerning. We already had a shortage, and now you're going to slow down the building.
Yeah.
So I think the people who, most of the people I'm working with on them for the most part are people who are coming from out of state or they have big chunks of money to put down. And the couple that is scraping together 3.5%
Yeah,
is losing out, or they're losing out to that other buyer who has a ton to put down, conventional loan or their cash or whatever. So it's challenging.
I think the other part of all of this that we're going through, you know, we hear it was like, it's a cleansing, right, of all the lenders that are in, and then all the lenders that jumped in back in 2020, 2021, and then also the real estate agents.
Yeah.
You know, and it's like the ones that have established or are working to establish, they can probably sustain through the tough times.
Absolutely.
Paul, what else y'all seeing? What questions for us?
THDA still gonna be 3-4 weeks behind. I already have one like that.
There's,
As of yesterday, they were what, 2
on
or
the
3?
11th.
Okay, so about 2.
Yeah, right at 12, 13 days. But it was 3 weeks, it wasn't
Yeah.
full 3 weeks.
Yeah, I dealt with it earlier.
So, yeah, you know,
Which is really amazing. I mean, that's amazing to me, given that not too long ago it was a matter of hours.
right.
And
THC
now,
was back.
and then like, my theory is that there's like 1 or 2 people that are like working on these deals. they just reduced the size of the office or something, because how many THD deals are really being won out there? Really, I mean,
Right.
there can't be that many contracts out there.
One would think. It's,
I don't know.
yeah, so hopefully it'll get back down maybe to a week. Who knows? But I think setting an expectation, if you do take the contract with the THCA in 60 days,
Shooting mama.
Yeah.
Probably.
and that's tough.
Yeah.
It's hard to sell that.
Mhm.
You know,
Yeah.
yeah, it's real tough.
THD, that's all it is.
Yeah. Yeah, ended up being almost a full 60 days.
Anything else? Thank y'all for having us.
Thank you.
Thanks for lunch.
Yeah, thanks for watching.
You got it.
Where's that food at? I'm withering away.